Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Brian Joyce. He's a managing director on Nasdaq's market intelligence desk with the midday update. We're going to take a look at some charts as well, and you're going to understand how time frame is always important and context when it comes to charting. Brian, it's great to have you with me as always. And before we get into our charts, markets again kind of flattish throughout the day. On U.S.-China trade deal, there's really not much else going on.
Yeah, a lot of mixed headlines in the last 24 hours. One of the brokers was out saying that, at best we'll see a phase one deal. We may not see it this year, but then potentially we could see Trump punt the increase in tariffs next month. So negative, positive, implications. It's really been chopping things up a little bit.
Yeah, it's really interesting how stocks moved yesterday at 1 o'clock off of that headline that's going to get pushed out to 2020. I think what's most interesting is this Hong Kong bill, which actually has bipartisan support, which does not happen much in D.C.
Right.
The House and the Senate passed it. Now it's on Trump's desk. Someone's not going to be happy either way, depending on if he signs it or doesn't sign it.
Right. So it looks like he probably will sign it from what I've been following, which hasn't been too closely, to be honest. But
right.
I would have thought, based on that the markets would have seen a more of a risk-off kind of move today. But we're not seeing it, which is interesting and telling.
All right, let's take a look at rates. And you said in the midday note that they're behaving very technically. What are you taking a look at?
So yeah, when I said they're behaving very technical, really over the last 12 months, not just since the August lows, that's what we highlighted in the note today, but really over the last 12 months since the start of the fourth quarter of 18, they've just been responding very well to traditional technical signs that we look for: prior highs, moving averages, things like that. And so we're looking at the 10-year yield. The recent high was made back on November 7th. And we, on that same day, actually said we could see a top right here in the yields. It was hitting some clearly defined resistance levels. The daily RSI was getting elevated and had moved, quite a bit off of the August lows. So we were expecting, it looked like an obvious level for, a healthy kind of correction. And we've been seeing that. It's been down for the last 2 weeks since. And right now, yesterday, it hit the 50-day moving average. So just about a week after that initial note, which was back on 11/7, on 11/13, we took a deeper dive and said, well, where is it going to pull back to? We thought maybe the 20 or the 50-day moving average. It pretty much knifed through the 20 days. It stalled there for a day or two, but then yesterday went down further to the 50-day. And so, as you could see, it's proven to be pretty sensitive to the 50-day moving average. If we could actually see a little bit further back, which we at the moment won't be able to, but the 50-day had acted as a resistance level on all bear market rallies over the last 12 months. And now that we're on the uptrend, it most recently, in early or late October, acted as support. So maybe it will act as support again. So yesterday we did stall there at the 50. Intraday this morning we dipped below it, but now we're back above it. And the candlestick is now engulfing yesterday's candlestick. So at the moment we have a bullish engulfing candlestick. We'll see how that closes for the rest of the day. It's only a 2-day pattern. I'm really more focused on what the weekly pattern will look like, and so we'll have to see how that looks tomorrow. But certainly potential here. We'll see what the signs or the latest headlines will be out of China. But certainly potential that maybe today or this week we're seeing that pullback complete in the 10-year yields.
Well, it's really interesting because you pointed this out in today's note. The time frame is always important and context is key. And I think that's, especially in financial media when we're talking about picking levels and so forth, sometimes it doesn't happen on the next tick or the next day. And that's why you need to think about, am I a day trader, a swing trader, a longer-term investor, and what your investment style is like.
Absolutely. And I wanted to highlight that because we had been making a lot of different calls and forecasts sometimes on what's been happening each day or each week. And sometimes we do put a forecast out there, and sometimes we're really just acting as, I say, play-by-play commentator. And maybe that's more so what we're doing right here, where we're highlighting the fact that, okay, it's hit that 50-day that we were thinking could potentially act as support. If it doesn't hold, it's not the end-all, be-all. What do we do then is we just reassess and look at what could be the next potential support, which to me would be the recent low made in early October, or I should say early November, at 1.67%. If that was to break and the yield dips a little below that, closes a couple of days below that level, then that breaks the trend of higher lows and higher highs and higher highs. Now all of a sudden we have a low. And so again, that is not even in and of itself the end all be all, but that would just say to me we're in for maybe a longer period of corrective price action.
All right, let's move along to the regional banking index. We're taking a look, we'll take a look at two charts on this one, and it has been in a 3-month uptrend.
Yeah, so this is the KRX index, and this has been in an uptrend since the August lows. So the white downtrend line shows the decline from an early point this year in early February, which is also when small caps peaked. This is filled with a lot of regional banks. And as you can see, during the more recent 3-month uptrend, we did break above that downtrend line. The uptrend is highlighted by the blue dotted lines. We gained about 16% off the August lows, and now we've pulled back about 4%. It's today and yesterday, actually about 3 days this week, we've tested that 102 level, which was a gap level, and we know gaps from technicals can often act as future levels of support or resistance, in this case support. So it looks like it could hold that level. It's actually already moving higher. It's closer. It's trading now closer to the high of the day. Again, it's just 1 day session, so we'll have to wait and see. But if yields on the long end are going to continue to go higher, that means the curve should re-steepen because the Fed has the short end kind of locked down there. And it's going to pretty much stay there for the near to intermediate term at the least. So if the long end is going to trade higher, which I think it certainly could, then that should be good for banks. Maybe this corrective price action that we've been seeing for the last 2 weeks is over and the uptrend will resume. Like we said, it has moved up already 16% from the August lows, but this month in November, financials are one of the leading sectors in the marketplace. And if you look at the longer term chart, the weekly period chart.
Yeah, that's our next chart here. Here we go.
And so what we can see is that 60% move up off the August lows, it's just beginning to break out below the downtrend line, the longer term downtrend line from the highs of June, the highs made back in June of 2018. So we're still 16% below those highs, whereas we're looking at industrials, we're looking at biotechs, we're looking at healthcare. Well, maybe not biotechs, but the broader healthcare space is breaking out to new highs. Industrials are new highs. Materials are right there as well. So a lot of these different industries are breaking out above key resistance levels. Some of those resistance levels are 52-week highs. So for the KRX, it's just beginning to break out of this, let's say, basing pattern that it's been in for the last, say, 6 months. It's now above the downtrend line. And if we get anywhere close to the last year's highs, that's a 16% move from here. So it's nice.
All right, Brian, thanks so much as always for joining us at MarketSite.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.